Hi friends, very good morning all of you. Welcome back to CAP classes. So we are looking at this revision classes of auditing. In that today we are starting with one of the most important topics for examination, and that is company auditor. So as you know, the weightage of this company audit in both old syllabus and new syllabus is very high, and practical questions are expected and case studies will be given, and in MCQs also, you know, so many times they'll touch various provisions of this company audit. We have to read the provisions very carefully and we need to understand it. This is point number one. Point number two, getting marks in company audit actually is very easy. So it's not difficult, like you need to understand so many procedures, you need to remember so many things and all. So they are pretty easy, and because it is important for exam, I am sure every student reads it again and again, so that already, you know, you might have got some very clear idea about the company audit. So today, because it is a revision session, we are not going to enter into the interpretation of the statutes and all that kind of detailed discussions. From exam point of view, we'll do a very quick revision. Okay, so shall we start with this? Yes. So I have prepared a material wherein I have cut the whole company audit into various questions, so that, you know, it is very easy for the student to read and understand. So we are starting with question number one. Who can be appointed as company auditor? Don't you think it is a basic question? Simple. A chartered accountant in practice, either in his individual name, if he is having a sole proprietary firm, that sole proprietor firm, or a firm of chartered accountants, or LLP of chartered accountants incorporated in India. These people, these categories of auditors can be appointed as statutory auditor of a company. Note point here is, one very important note point here you need to remember is, an LLP incorporated outside India cannot be appointed as auditor in India. For example, an LLP, you know, incorporated in, say for example, Singapore. One LLP incorporated in Malaysia, you cannot appoint that. Indian LLP Act 2008, if an LLP is incorporated in India, it can be appointed as sole proprietor, it can be appointed as company auditor. So this can be asked in MCQ. You understand? Or this can be asked in a case study. So just read 141(1), sole proprietor appointed in his own name, partner if there is a firm of chartered accountants, and LLP. Remember two things. Point number one, if you are appointing a firm of chartered accountants, say for example, I am a practicing CA. Imagine I have Pavan Kumar and company. If it is a partnership firm, can I take one cost accountant, company secretary, lawyer, engineer, or any other professional into this CA firm? The answer is yes. The answer is yes. But the rule is, those professions must be approved by Chartered Accountancy Board, ICA. So ICA has already issued one, you know, very clear notification as per Chartered Accountants Act. In schedules also clearly it is given that cost accountants, company secretaries can be partners to chartered accountants. But the rule is, if you are appointing a CA firm as your statutory auditor of a company, majority of the partners shall be chartered accountants. For example, if there are 5 partners in Pavan Kumar and company, minimum 3 should be chartered accountants. Minimum 3 should be chartered accountants. Okay, if 4 people are cost accountants, only 1 person is chartered accountant, you cannot appoint that firm. Okay, so this is about one. Who cannot be appointed as company auditor? These are called disqualifications. These are called disqualifications. First one is qualification, this is a disqualification. So what are the disqualifications? One, body corporate. A body corporate cannot be appointed. LLP is an exception. Already we have discussed that. Second one is an officer of the company. Third one is a person who is partner or employee of officer or employee of a company. So read the second one. Second one says officer of company and employee of company. So it is something simple like this. So if there is a company by name X Limited, if there is a company by name X Limited, so X Limited has one officer. Who's officer? Director, company secretary. These people are called as officers. So there is one X Limited. So in X Limited there is one officer. In X Limited there is one officer. Now imagine this officer is a chartered accountant in practice. Imagine this officer is a chartered accountant in practice. For example, I can be director in a company. Even if I am practicing CA also, I can be director in a company. But I cannot be appointed as auditor of the same company. Independence issue. And employee of company. employee of company. Imagine he is CA in practice. As per Chartered Accountants Act, if you are employed, you cannot hold COP. But Companies Act says, even tomorrow ICA gives permission to members to hold COP and to do employment also. Imagine a situation comes where ICA said both are allowed. You can, one person, I can apply for COP, I can join a job also, even if ICA says that particular employee chartered accountant cannot be appointed as auditor of this company. This is a disqualification. Then, Pavan sir, what if this officer has a CA firm? In that firm, one employee chartered accountant is there, or in that firm, one partner is there. And this employee chartered accountant has one CA firm. In that one employee chartered accountant is there, one partner is there. Now, second clause says, these two guys are disqualified. Third clause says, these four guys are disqualified. So, what is this? An employee or partner of officer or employee of the company are disqualified. How to understand this? An employee or partner of officer or employee of the company are disqualified. So, this is your item number C. So, what is the first one? First one is, what is the first one? First one is body corporate. Second one is officer or employee of the company. Third one is partner or employee of part B. In part B, officer and employee is there. Part C says partner or employee of B is also disqualified. Then D, a person who himself or his relative or his partner. A person who himself or his relative or partner is, there are three disqualifications. 1, 2, 3. Okay, that Roman 1, 2, 3 I have written. Observe them carefully. Roman 1, 2, 3. 1. Who is holding a security in a company. Holding a security or interest in a company is also nothing but ownership. Ownership interest we call. So this is shareholding. What is this? This is shareholding. 2. Indebted to the company. That means you have borrowed money or you bought goods on credit. You have borrowed money or you bought goods or services on credit. And third one is you have given guarantee. Third one is you have given guarantee. So the first one is shareholding. The second one is indebted. Third one is guarantee. Then if you look at the language, a person himself or his relative or partner holding any security or interest in the company, or it's a subsidiary company, it's holding company, it's associate company, or its co-subsidiary company. So the company itself, its holding company, its subsidiary company, its associate company, its co-subsidiary company. So you have to remember it like this. This is X Limited. There is one holding company here. There is one subsidiary company here. There is one associate company here. There is one, H Limited has another subsidiary S2. H Limited has another subsidiary S2. So this is the company and its holding company and its subsidiary company and its associate company and its co-subsidiary company. Either partner, either person himself or his relative or his partner. Person himself or his relative or partner. So in any of these companies, either me or my relative or my partner in CA firm should not have 1 shares. 2. Should not be indebted. 3. Should not have given a guarantee. So here up to 5 lakhs allowed. Here up to 1 lakh allowed. Here for relative 1 lakh face value allowed. For relative, not for me. For relative, he can hold shares up to 1 lakh rupees of face value. Very important provision, back to back asked in the examinations in both, MCQs, and also they'll create a case study. Okay, X Limited is, a public limited company. A and company is a chartered accountants firm. Mr. B, who is a relative of Mr. A, who is partner of A and company, holds shares worth 55,000 rupees in the holding company of X Limited. Can A and company be appointed as auditors of X Limited? They'll give so much of drama and story. Finally, you need to understand the provision first. Person, relative, partner. This company, holding company, subsidiary company, associate company, co-subsidiary company shall not own shares, shall not be indebted to the company for an amount exceeding 5 lakhs, shall not have given guarantee for an amount exceeding 1 lakh. Okay, and exception for shareholding is given to relatives, not to this chartered accountant who is proposed to be appointed. That means I cannot hold shares in X Limited. My relative can hold shares in X Limited. I cannot hold shares in X Limited. My relative can hold shares in X Limited. And remember another thing, at CA intermediate level, there will be no question in the exam where you will verify whether the other person, Mr. B, is related to Mr. A. That question will not come in the exam. In the exam, they'll say B is a relative. Okay, at final level, you might decide whether relationship exists or no. Whether relationship exists as per company law, whether relationship exists as per accounting standard, whether relationship exists as per income tax act, all these are different things. In CA intermediate or IPCC audit, this question will not come. What will come? Mr. B is a relative of Mr. A. They will give it. Then whether Mr. A's appointment is valid or no, this question will be asked. So this is the provision. So I am reading it out. Already I have explained. See this. A person who himself or his relative or partner is holding any security or interest in the company or its subsidiary, holding associate or co-subsidiary, provided that relative may hold security or interest of face value not exceeding 1 lakh. The condition of 1 lakh shall, wherever relevant, be also applicable in case of a company not having share capital or other securities. You leave this. There are companies without share capital also. They are speaking about that. Then, so this point doesn't make any big difference. You can ignore it. Then, Pavan sir, my relative is holding more than 1 lakh rupees worth face value shares. More than 1 lakh rupees worth face value shares. My relative is holding. What can be done? What can be done? Imagine I am appointed as auditor of a company. I am appointed as auditor of a company. I accepted. I started conducting audit. My own brother appointed shares of this company. Then my brother called me and said, bro, listen, you are conducting audit of one company. No, I bought shares worth 2 lakh rupees face value in that company. Then I have to say, idiot, now I will be disqualified. Subsequent disqualification. So please sell the shares within 60 days from the date of acquisition. So if he sells the shares within 60 days of that acquisition, I can continue to be the auditor. So read the third one. In case the relative acquires any security or interest above 1 lakh, the corrective action to maintain limits shall be taken by auditor within 60 days. That means you bought shares worth 2 lakhs face value. So you can sell shares worth, 1 lakh face value. Remaining 1 lakh face value is allowed, no, as per point number 1. Then 2 is indebted to the company or its subsidiary, holding associate or co-subsidiary of such holding in excess of 5 lakhs. Indebtedness is 5 lakhs. Now remember very important thing. Point number 1, it is not only taking loans. Even if you purchase goods or services worth 5 lakh rupees, excess of 5 lakh rupees also, you are disqualified. Then third one, has given a guarantee for any third person to the company or its holding subsidiary, blah, 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 same, in excess of 1 lakh. So shareholding for auditor, absolutely not allowed. Relative, 1 lakh rupees face value allowed. If it is more than 1 lakh rupees, within 60 days, you can take the corrective action. 2, indebtedness, 5 lakh rupees allowed. And guarantee, giving guarantees, 1 lakh rupees is allowed. Who? 3 persons. Person himself, his relative, his partner. How many companies? 5 companies. The company, its holding, its subsidiary, its associate, and the subsidiary of its holding company. Like co-brother, co-subsidiary company. This is the provision. A firm who, whether directly or indirectly, has business relationship. Underline this phrase, very important, very important. This business relationship is explained. This business relationship is explained. So you should not have any other business connection with your client company. So if I am auditor of X Limited, I should not have any business relationship with X Limited. Now you might ask some questions. Pavan sir, what if X Limited is a hotel? Can you take hotel room there? Yes. Pavan sir, what if X Limited is an airline company? Can you book flight tickets in that airlines? Yes. Pavan sir, what if X Limited is something like, telecommunication provider? Can you have internet services? Can you have mobile phone connection? The answer is yes. Pavan sir, if it is a hospital, can you take medical services there? The answer is yes. So as a customer, if I am customer, I am not reselling the goods. As a customer, I bought some goods from my client company at arm's length price. I paid money. Then it is not a violation. It is not a violation. So it is something like agency relationship. I cannot work like agency for the company. I cannot work like sales commission agent, or I cannot work as a channel to them. So that kind of business relationships here are prohibited. So look here, a person, firm, who whether directly or indirectly has a business relationship with the company or its subsidiary or holding, associate or co-subsidiary of such nature as may be prescribed. Remember one thing, whenever this phrase comes, of such nature as may be prescribed, that means the Companies Act is saying central government will frame rule later. Whenever in any act, you are reading any act, in the act they said procedure or the limits as may be prescribed, means for that there will be one rule given by central government later. Okay, now try to understand one basic difference. Try to understand one basic reference. Act. Okay, so many students, they do not know this. Act is passed by Parliament. Rules are passed by central government or state government. Rules are passed by central government or state government. Judgments are given by courts. Judgments are given by courts. Now, all these three things put together is called law. When you say Companies Act, it is only act. When you say companies so and so rules, then it is only rules. In a specific case, it is held that, means that is only judgment. But when you say company law, it refers to act plus rules plus judgments. All put together is called company law. You understand? You understand? Now come back. So here what they are saying, they have given some prescribed manner where the term business relationship shall be construed as any transaction entered into for a commercial purpose. So what is this business connection? Business relationship means you are doing it for a commercial purpose to earn profits. So if I am taking services as a consumer, it is not a restriction here. I can take services of my client. Okay, now except commercial transactions. So what is the meaning of the word except here? They used the word except here. They used the word except here. That means 1 and 2 are exceptions which are allowed. These are allowed. Which are in the nature of professional services permitted to be rendered by auditor or the audit firm under the Companies Act and CS Act. That means, Pavan sir, I am conducting audit of X Limited. Can I render a professional service to X Limited? Will it be a business connection? Now remember, as per Chartered Accountants Act, there are certain prohibited services. As per Companies Act, you remember section 144. 144 are the specific services that cannot be rendered by a chartered accountant, a company auditor to the same company. For example, books of account. If I am conducting audit of X Limited, I should not participate in developing books of account or doing internal audit or preparing financial statements of X Limited, payroll services. Certain things are not allowed, certain things are allowed. You understand? So, Pavan sir, I am auditor of X Limited. I am rendering some service which is allowed by CA Act, which is allowed by Companies Act. Is it a business connection? The answer is no. Second thing is, in the ordinary course of business, at arm's length price, auditor is behaving like a customer, not a reseller. So I am taking telecommunication services, airline services, hospitals, hotels, or any other similar businesses. For example, my client is a very big sweet shop. Can I buy sweets from him? Yes. If I am a customer, I can buy sweets from him, but I should not open a retail outlet to buy, sweets from that client company in wholesale and I cannot sell in retail. But in my house, if there is a function, can I buy, sweets from him? The answer is yes. Okay, so this is the thing. Then, a person What is the next one? A person whose relative is a director or key managerial personnel in the company. So who's this? Say my father is a relative or KMP. KMP, I think you know. KMP is also like the executive director, CEO, CFO. All these people will come under key managerial personnel. Okay. So if my relative is a director in the company, my wife is a director in company, I cannot be auditor of that company. Simple. My dad is KMP of a company, I cannot be auditor of a company. Now remember, in the question if they have given that Mr. A is a relative of Mr. B, A is a general manager of a company, can Mr. B be appointed as the auditor of same company? The answer is yes, because this general managers, manager purchase, manager finance, this kind of people are there, no? They are not KMP. Key managerial personnel means something like board of directors. You understand? And that too, not even all the board of directors, some of the board of directors who have control on the company. So you can say all the directors and this company secretary, these kind of people, officers. Now, so next one, a person who's in full-time employment elsewhere. If I am in full-time employment elsewhere, I cannot be auditor of a company. If I am in full-time employment elsewhere, I cannot be auditor of a company. Then, or a person who at the date of appointment or reappointment, that means you are proposing me to be the auditor of your company. On that day, I have more than 20 company audits or 20 company audits or more. You cannot appoint me as an auditor because there is a specific ceiling limit. There is a specific ceiling limit. No auditor can have more than 20 audits. But of course, for the 20 audits, there are certain exceptions, there are certain inclusions, exclusions that we'll see later. And remember, this is only for statutory audits of company. For tax audits of company, there is a different, for tax audits of company, there is a different ceiling limit, that is 60. So don't confuse with ceiling limit of company audit and the ceiling limit of tax audit. Tax audit ceiling limit is different. Can the auditor of a company be the tax auditor of company? The answer is absolutely yes. If I am conducting statutory audit of the company as per Companies Act, I can be tax auditor of the same company as per Income Tax Act also. Because both are statutory audits, no independence problem. But if I am statutory auditor of the company, I cannot do internal audit. You understand? Then, so next one is a person who has been convicted by a court and 10 years has not been elapsed from date of such conviction. So court concluded that this person did a mistake and court has given some punishment. Okay, from that date of court judgment, 10 years, he cannot be appointed as auditor of a company. Then the next one is any person whose subsidiary or associate company or any other form of entity is engaged as on the date of appointment in consulting and specialized services as provided in 144. This is usually applicable for networking firms. Okay, networking firms means say EY, Ernst & Young. So Ernst & Young, there will be one LLP, there will be some partnership firm under Ernst & Young brand, and there will be one management consulting company. So if my management consulting company, Pavan Kumar LLP or Pavan Kumar Private Limited, Consulting Private Limited, if they are doing some service, whatever is given in 144, Pavan Kumar and company chartered accountants cannot be appointed as auditor. That means my associate, like they call it subsidiary company or associate company, they also cannot render 144 services. That is this point. 2. Where a person appointed as an auditor incurs any disqualification after his appointment. So point number 1, disqualifications are to be checked at the time of appointment. Disqualifications are to be checked at the time of appointment. Pavan sir, on the date of appointment, this guy is not disqualified. He has qualifications and is appointed. After 2 months, his relative holds shares or his relative is appointed as director of a company. Now he is attracted by disqualification. This is called subsequent disqualification. The moment you are attracted by subsequent disqualification, you shall be deemed to have vacated your office. Whether you resign, the company will remove you or no. The day when your relative is appointed as director of company, you attracted disqualification, no? So you are deemed to have vacated your office. Even if you do any work after that, there is no, validity for that. So when you are removed, prior to that, whatever work you have done also is not valid. That is a different story. So you are removed. from the audit of that particular company. This is called subsequent disqualification, 144(1). Look here, where a person appointed as an auditor of a company incurs any of the disqualifications mentioned above after appointment, he shall vacate his office. He shall vacate his office as auditor of such company, and such vacation shall be deemed to be a casual vacancy. That is a casual vacancy. How the casual vacancy will be filled, that we'll see little later. Now, Pavan sir, there are some mention about section 144. Now, what is this section 144? So here 144 is given above somewhere, which are permitted by the Chartered Accountants Act, Companies Act, services which are permitted. So what is this 144 disqualification? That is given in the next question. Section 144 of the Companies Act prescribes certain services not to be rendered by auditor. Some students will misunderstand it like this. Some students will misunderstand it like this. Say for example here, accounting and bookkeeping services. So, a chartered accountant cannot render accounting and bookkeeping services is wrong. A chartered accountant can render accounting and bookkeeping services, but I cannot render this service to my auditee client. I cannot render this to my auditee client. That means if my client is X Limited, I am already performing statutory audit of X Limited, then I cannot render these services to him. Some other company comes, I can do any of these services if they are not prohibited by CA Act. So what are these things? Certain services not to be rendered by the auditor. An auditor shall provide only such other services as are approved by Board of Directors or the Audit Committee. This is also very important. So Board of Directors or the Audit Committee. What is Audit Committee? Section 177. Section 177 speaks about which companies are supposed to have audit committee. That we'll see little later. So, Pavan sir, can I render non-audit services to my audit client? Can I render non-audit services to my audit client? The answer is yes, only if they are not prohibited by 144, they are not prohibited by Chartered Accountants Act, and the Board of Directors or Audit Committee approved. Then you can do. So what are the conditions? What is the question? Can I can a company auditor perform other services to his auditee client or audit client? Auditee himself is client, audit client. The answer is yes, only if 144 is not prohibiting that service, Chartered Accountants Act is not prohibiting service, Board of Directors or Audit Committee said, dear Mr. Auditor, go ahead. They approved. Then I can do that. You understand? Very, 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 very important from exam point of view. Very important from exam point of view. This is a global disqualification. In many countries it is there. Many countries. Okay. So what are the services that cannot be rendered? 1. Accounting and bookkeeping. 2. Internal audit. Very important. You cannot do internal audit of your audit client. 3. Designing and implementation of financial information system. Why? Because that is what you need to evaluate. No. So if you develop that, there will be self-review threat. Self-review threat. Threats to independence. So you should not do that. Actuarial services like calculation of provision for gratuity and this kind of services, that you should not do. Then investment advisory services, investment banking services, these are prohibited. Independence issue. If I am conducting audit of Infosys, for example, Infosys is looking for 10,000 crore rupees of additional capital. If I am doing liaison, if I am negotiating with some of the private equity funds, my remuneration in that venture capital or private equity deal will be 100 times more than my audit fee. So if at all some misstatement happens in the financial statements or irregularities are there, I will not be firm because I have bigger money there. So they will influence you. That is the reason investment advisory services, investment banking services, and rendering outsourced financial services. Management consultancy, management services means, as management you are doing it. Then any other kind of services as may be prescribed. That means prescribed by central government from time to time. These are prohibited. You cannot do these services. important for MCQs also, important for case studies also. Or they might ask you straight theory question also. What are the services prohibited under 144 of the Companies Act? That's it. Now, we are going to the next part, that is the appointment of auditor. So, I have divided this into two parts. First auditor, subsequent auditor. Who is first auditor? After incorporation of the company, normally within 30 days you need to appoint auditor, no? He is called first auditor. Any auditor after first auditor is called subsequent auditor. You will not ask second auditor, third auditor, fourth auditor. You will say first auditor, subsequent auditor. So, who will appoint first auditor? What is the procedure? Who will appoint subsequent auditor? What is the procedure? Is given in this table. Okay, so read this. Appointment of first auditor is governed by 139(6). Appointment of subsequent auditor is governed by 139(1). Section numbers also sometimes play a big role. If you are remembering, you should be very clear. If you are writing wrong section, you will lose marks. Either quote section correct or don't quote section. Quoting wrong section will lose marks. If you quote section number, definitely you will get advantage, maybe 1/2 mark they might give you. But if you are quoting wrong section, they might, cancel 1-2 marks also. So, who appoints first auditor? Board of Directors. Who appoints subsequent auditor? General meeting. In annual general meeting or extraordinary general meeting, members will appoint. Then, what are the appointment restrictions? To be appointed within 30 days from the date of registration of the company. Date of registration. It is not date of commencement of business. First auditor shall be appointed within 30 days from the date of registration of the company. You understand? Then what about subsequent auditor? He will be appointed in one AGM. That AGM will be counted as first AGM. From that, his tenure is 5 years. So in the 6th AGM, he will retire. So some students will ask some doubts, okay, funny doubts. Pavan sir, 34th AGM in X Limited is there. In their 34th AGM, Mr. A is appointed as auditor, or A and Company Chartered Accountants firm is appointed as auditor. How can his tenure comes to an end in 6th AGM? Are idiots, whatever the AGM you are appointed, treat it as first AGM for the purpose of count. So 36th AGM is first AGM. 34th AGM is first AGM. 35, 36, 37, 38, 39. You understand? So in the next AGM you will retire. That is what they are saying. So auditor should be appointed in first AGM and will be appointed, reappointed every 6th AGM. Every 6th AGM. Then what is the tenure? First auditor will continue up to first AGM. Subsequent auditor will continue up to 5 years, subject to some conditions like rotation of auditors or something else is there. Okay. And some qualifications are to be maintained. Some disqualifications are not to be attracted. These kind of things. Failure to appoint. If board of directors fails to appoint, then members in extraordinary general meeting can appoint auditor within 90 days. Okay. If members in AGM fail to appoint auditor, there is no provision for appointment. Remember, very, very, very important. Before 2013 Act, before 2013 Companies Act, if company auditor is not appointed in AGM, central government appoints auditor. This is before 2013 Act, that means 1956 Act. In 2013 Act, there is no solution if the company is not appointing auditor in general meeting. That is an offense and probably the biggest offense. There will be no AGM without appointment or reappointment of the auditor. It is common sense, and company cannot convene AGM without appointment or reappointment of the auditor. That is ordinary course of business as per your Companies Act. So remember, if general meeting is not appointing the auditor or reappointing the auditor, there is no provision to appoint auditor by some other authority. It is a contravention, and contravention penalties will apply. Then Intimation to registrar. First auditor need not give intimation to registrar, but subsequent auditor must give 15 days. Within 15 days, he has to give the intimation to registrar. Okay, and then section 141. Certificate must be obtained. Certificate must be obtained. What is certificate of section 141? See, you are thinking of appointing Pavan Kumar as your company auditor. But how would you know whether he is having any of the disqualifications, whether he has any, court cases, whether he has any disciplinary committee proceedings, or whether he has 20 audits or more? How would you know? You do not know. So, before appointing a firm or a person as your company auditor, you will ask a written certificate from him. He has to mention that he is having qualifications and is not disqualified by CA Act or Companies Act. Not disqualified by CA Act or Companies Act. And he has to mention that there are no court cases or disciplinary proceedings of ICI on him. So he has to mention all these things. If at all there is any court case, he has to mention those cases. After that, audit committee or board of directors will decide whether to appoint a person with this track record or no. It is up to them. So even if you appoint me, my number of audits will be under the specified number of audit. It will not touch or go above 20. That I should mention. Otherwise, how would you know how many company audits Pavan has? Unless I tell you. That is this question. So next, how the auditor of first company is appointed? How the auditor of government company is appointed? What is a government company? Government company is a company in which not less than 51% of the paid up share capital is held by central government or state government or a combination of central government and state government. Then who will appoint the auditors of these kind of companies? C&AG, Comptroller and Auditor General of India will appoint. Okay, first auditor, C&AG. Subsequent auditor, C&AG. Casual vacancy, C&AG. That's all. Okay, so read the answer. Read the answer. Simple provision. So look here, within 60 days, if C&AG fails, board of directors within 30 days. First is C&AG. C&AG can appoint within 60 days from the registration. Remember, normal first auditor 30 days, board of directors. Government company first auditor, C&AG 60 days. Pavan sir, if they fail, board of directors will appoint within 30 days. So first C&AG 60 days. If they fail, board of directors 30 days. Pavan sir, if they also fail, then members in EGM, members in extraordinary general meeting, that is 60 days. These are the things you need to remember. That's all. When the subsequent auditor is to be appointed, very interesting. Within a period of 180 days from the commencement of the financial year. When the subsequent auditor of a government company is to be appointed, so your financial year starts on 1st April, correct? So calculate 180 days. So it is something like April, May, June, July, August, September. Somewhere at the end of September, 180 days will be over. If you count 180 days, somewhere at the end of September. Before that, you need to appoint subsequent auditor. Now, some students will ask, Pavan sir, why is there a difference between appointment of auditor of government company and appointment of auditor of a company other than government company? My dear friend, both are same because in case of a company other than government company, you will appoint or reappoint in AGM, no? As per the provisions of Companies Act, AGM shall be held within 6 months from the date of balance sheet, no? So balance sheet date is 31st March. Within 6 months, you will convene AGM. In that AGM, you will appoint or reappoint auditor. Same ho gaya na. This is 180, that is also approx 180 only. So there is actually no major difference. You understand? So this is the provision. First auditor within 60 days by C&AG. If they fail, board of directors, next 30 days. If they fail, EGM members, another 60 days. Then appointment of subsequent auditor from the date of the commencement of the financial year. Within 180 days, C&AG will appoint the auditor. Then, how is a company auditor reappointed? Can a company auditor be reappointed? The answer is yes, provided if you are not suffering from any of the disqualifications for reappointment. 2, he has not given the company a notice in writing that I am unwilling to be reappointed. So I am auditor of X Limited. I wrote a letter to board of directors and the audit committee and I said that, hey, I want to retire from practice, or I want to join a job, or I am migrating to another country. Please don't reappoint me. Look for some other auditor. Now I cannot be reappointed because I have expressed my unwillingness. So they cannot appoint me. Reappointment. Then third one is special resolution has not been passed at the meeting appointing some other auditor or providing expressly that the auditor shall not be reappointed. So the members of the company have passed a special resolution. We will not reappoint our existing auditors A and company. In the place of A and company, we want to appoint B and company. Now A and company cannot be reappointed. That's all. So the retiring auditor may be reappointed if he is not disqualified, if he has not written any communication that he is unwilling. 3, the company has not passed a special resolution either to remove him, not to reappoint him, or to appoint some other person in his place. So if these 3 conditions are satisfied, then you may reappoint. Where at any AGM no auditor is appointed, the existing auditor shall continue. This is actually in 2013, this is amendment. Now this is the old provision only. So in AGM, in AGM, you are not appointing any new auditor. Then the existing auditor will continue. Okay. Now casual vacancy. So what is casual vacancy? 139(8) speaks about casual vacancy. So read this. Death of the auditor. You have appointed the auditor. He met with accident and unfortunately died. Disqualification attracted by the auditor. Dissolution of firm of auditors. There is a firm of auditors A and company. They went into dissolution. These are the situations where you say it is a casual vacancy. Casual vacancy due to resignation. Vacancy due to resignation we'll discuss separate. This is vacancy in the seat of the auditor other than resignation. What are they? Resignation is also one of the reasons for casual vacancy, but procedure is different. Okay, so do one thing. Casual vacancy means death, resignation, disqualification, dissolution. Death, resignation, disqualification, dissolution. Out of all these things, resignation is something which is significant, because why the auditor appointed wants to resign in between? Is there any intimidation threat? Is there any coercion? Is there any undue influence by the board of directors? Or maybe he knows any fraud and he is scared to continue with the company. Why he wants to resign? Okay. Now, who will appoint the casual vacancy? Casual vacancy will be appointed, see, like this. If your normal auditor is appointed by C&AG, that means government company. Now, casual vacancy will be filled by board of directors within 30 days. Read the provision. In case of a company other than government company. No, this is, yeah, they have given little confusing because law, no, it will be like that only. Try to understand that first one is auditor of a company other than government company. Then board of directors within 30 days will appoint. What if it is appointment by C&AG originally? That means a government company. C&AG will fill within 30 days. If C&AG fails, then board of directors will appoint the casual vacancy auditor in 30 days. Simple. Casual vacancy, filling up casual vacancy. Imagine a chart with 2 arrow marks down. Government company, other than government company. Other than government company, BOD in 30 days. Government company, C&AG in 30 days. If C&AG fails, then BOD in another 30 days. That's all. Okay, now look at the procedure. Fourth point is important. Casual vacancy by resignation. Very, very, very important. As per section 142, auditor who has resigned shall file within a period of 30 days from the date of resignation, and he has to file a statement ADT 3 with the registrar and with the company. This ADT 1, ADT 2, ADT 3 can be asked in the exam in MCQs. ADT 3 is after resignation you will submit. Okay. So in case of companies under 139(5), that is subsequent auditor of government company, auditor shall also file such statement with CAG. Simple. If it is a government company and if you are resigning, inform the company, inform the registrar of companies, inform the C&AG. If it is a normal company, if you have resigned, write this communication ADT 3 to company and ROC. That's all. So if you fail, 50,000 to 5 lakh rupees of penalty. If you fail, 50,000 rupees to 5 lakh rupees of penalty. This also can be asked in MCQ. What is the penalty under section 140 subsection 3 of the Companies Act to the auditor who resigned and who has not submitted ADT 3? 50,000 rupees to 5 lakh rupees. Okay, and they might ask you to whom the ADT 3, to whom the communication of resignation be given to. In case of auditor of a government company, A, to the company, B, to the registrar of companies, C, to C&AG, D, all the above. All the above is correct. You understand? That's it. Now we are going to another important area, provisions regarding rotation of auditor. Question number 8, provisions regarding rotation of the auditor.